think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show. Just a impromptu interview, chilling in the beautiful, what's it, Silver City?
Silver Springs.
Silver Springs.
Man,
Silver Springs.
Silver City.
Oh man.
It's a whole new thing, right?
Oh man. Let me see that, man. You got some got the Bitcoin, what's this, Dogecoin rocket?
That's the
This the Wall Street bets.
Wall Street bets.
And we got the Bitcoin silver ounce right here.
As I told Daryl, that was going under 20,000. I definitely mentioned that.
Oh yeah, you did. We're gonna get into that at some point. So we're in the beautiful city of Maryland. I actually came out here to shoot a wedding in Virginia with some pretty rich Cuban folks, and so it was pretty fun, good experience. And now, we're linked up because you're in the Baltimore area.
Right, in Baltimore.
So we're just right across the state line. So it's a good chance to link up. So JT, you've been up to a lot. You've interviewed on my channel a while ago.
Right.
That was like, what, 2020, I think? Late 2020.
Yeah.
Going on 2 years.
Yeah, about 2 years ago.
Yep. So now we back in the flesh. So what's been happening, man? So I see that you brought your silver out, man. I'm guessing you're a silver bull.
I'm a silver holder. My thing is this: I love precious metals. I love gold. I love silver. I have more silver than I have gold, and I'm getting to crypto. But crypto was something I stayed away from this year. Collecting silver, collecting gold, but more silver than anything else.
Yeah.
But I definitely wanted to bring these pieces here so we can talk about holding the precious metals, or continuing to talk about this crypto thing that's going kind of wild right now.
Yeah, for sure. Yeah, it's been very interesting because someone recently commented on one of my posts on YouTube and asked how many ounces of gold and silver I had. I told him I had close to 7 ounces of gold and about 200, almost 300 ounces of silver.
Right. Now, which is pretty amazing, man, because I remember you started, and I'm thinking that, hey, this man probably got about 50 ounces. When he told me he almost got a Fort Knott, over 300 ounces and 8 ounces of gold. I'm like, where you start stacking? But then I realized every week you was buying stuff.
Mm-hmm.
You was sneaking some stuff on it. So
me
and Eli was a little behind on that.
Yeah. Eli kind of got out. He was focused on the stocks for a minute,
right.
And everything. But now that we're seeing that the metals are holding up in this very volatile market, we're seeing that this really a safe haven.
Mm-hmm.
Obviously the dollar's been a safe haven. We talked about cash being king whenever there's a market crash, but gold and silver, it's been holding up pretty strong too. So it's pretty good to be able to store your wealth. And you've been on Twitter too, and I've seen you comment on a few of Peter Schiff's posts, and
pretty much. And
Peter Schiff talks about gold being how you stay rich. It's not how you get rich; it's how you stay rich. And how you protect your purchasing power over time. And so I think that's a good way to put it because, as we're seeing, gold and silver has not been having a big drawdowns like the risk assets. And, if you put your money in gold and silver, then you would still have some purchasing power.
Right.
Yeah.
That's the biggest thing, and also realizing that you put your money there, you at least got somewhere that's safe. Now liquidating it fast, that's probably more of an issue, especially with those who, like myself, who put more of their money in the precious metals than they have on reserve. So it has to sit, But I think that the most intelligent stacker, investor, make sure that it's more evenly laid out. You have your gold and silver, but you do have your cash and reserves. But what I hear a lot of analysts say right now is that, cash is king. You got to have some cash on hand. So I'm kind of putting my focus there right now.
Yeah, for sure. Yeah, it's it's kind of that give and take. It's trade-offs. I mean, like cash is king compared to what is compared to risk assets. Obviously. So when you're seeing these risk assets take a 50 to 70% decline, then you holding your cash, you can buy those assets very cheap.
Right.
I mean, Bitcoin, crypto, stocks like Shopify going from $1,700 to $300. Like stuff like that. So cash becomes king in that scenario. But when you're looking at the prices of gas, when you're looking at the prices of rent, you're looking at inflation, cash isn't king in that situation. But but it's but where else are you going to go? True. I mean, it's almost like everybody's in a situation where they are going to lose purchasing power in some way.
True.
Unless you're using that cash to purchase these assets while they're cheap. Because cash is losing value because of inflation.
Right.
Yeah.
We're not all producers, so we got to consume. So those things like you just mentioned, the gold, the gas, the food, you're living, we have to consume on a daily basis. So you have to have the money for it. So you're going to be affected by inflation. Now, for those who have the assets, who the benefit of the cash flow, that's a plus. But like for myself, and gas, food, got to replace that on a weekly basis. So we all affected. We all hit hard.
Yep. And I think like if you have certain things like a cash flow producing asset, like a rental property.
Right.
For example, like, my rental property, I'm not like a person that's out here like gouging, trying to get everything I can get.
Right.
But it's like, my property taxes go up. And it's like, okay, well, I need to charge a little more to cover that property tax. So that itself keeps my cash flow consistent, but then it also takes care of that inflationary aspect because of the property taxes going up.
Right.
I mean, because with the housing values at where they are, property taxes just keep climbing. Like my house was valued, according to the county, at $180,000 when I bought it in 2019. Now it's valued at $311,000. So
that's a big jump.
Yes, that's a big jump in taxes for my property tax. So me being able to pass that off to the tenant, to help out with that, it's very important.
Okay, that's a smart move. I mean, that's a good jump in 2 years, 180 to 300,000. Now, I was following someone, Antoine Daniels, and he was saying that cash flow is not what you want at this present time, and he doesn't really look at his investments as getting cash flow because money that you receive, you get taxed on. So he puts all his returns back into the investments. So he's asset heavy. He's not a fan of cash flow. What do you think about that, in a sense of understanding that cash flow usually comes to back to the person, and they spend it on expenses to keep their their monthly life, right? But putting it back, your profits back into your investments, so you can kind of beat the tax man. I guess it's another way to beat the tax man. What do you think about that process?
I think cash flow is pretty. I think it's unstoppable in a lot of ways because of the tax laws. So like, there's ways that you can write off certain expenses and such to reduce the amount of money that you're having to pay out on that cash flowing asset, like real estate or whatnot. But the biggest thing to gaining wealth is being able to have your money work for you in whatever way it is, and that's a lot of that's passive income. So having a cash flow passive income type asset helps you do that. So if you take your monthly salary and you're able to make that on a monthly basis just from your assets producing that cash flow, you can do whatever hell you want.
Right.
Like, you're not restricted to clocking in at a 9 to 5. Your assets are producing the cash that you need for you. And so that's the biggest way to become wealthy. And I mean, and obviously people do that in different ways, whether that's, some people do it in bonds. Like, obviously bonds are getting killed right now, but government bonds will pay you, 3-4%. When inflation was less than 2%,
Right, that was a good thing.
You know, so it was a positive. You were getting positive cash flow on those bonds just to sit and hold it, you know, and it's paying you, right? Same thing whether that's dividend paying stocks, you know, stocks that pay dividends. You know, those stocks pay you just to be a shareholder,
Right.
and you're not having to go out and, you know, break your back to get that money.
True.
You just hold the stock. Same thing, real estate property, or if you own like a business that's, you know, 500 or more employees, where you can produce that income and they're working the system for you. I mean, because taxes is ultimately the biggest thing that's going to impact the average person, whether that's your whether you're a wage, you know, regular wage worker, or whether you're self-employed. Taxes is the biggest enemy, and so you have to have some type of tax safe haven to be able to make that cash flow work for you.
True.
So it's I mean, it's interesting. I mean, there's different ways to go about it. Like, you know, Rick Rule said, multiple ways up the mountain. You know, so I don't like think that, you know, his way of investing or using his cash is wrong. It's probably works for him.
Yeah.
You know? But there's a lot of other people that have had other ways that work for them. And that's kind of like, you know, we talked about Dave Ramsey before.
Yep.
And Dave Ramsey is like, I learned from Dave Ramsey. I learned a lot, but his way isn't the only way.
Right.
You know, then I started getting into Robert Kiyosaki, and like he just had a contrary point of view, and I'm like, well, it's working for him too.
That's right.
You know, so
Being heavy in real estate with him, because he's heavy in real estate.
Yep.
I think Dave is too, right?
Yeah, Dave's in it, but he discourages taking on any debt, and Robert Kiyosaki encourages taking on debt to be able to. But then again, it's like you have these nuances of like, okay, whether that debt's in your social security number versus an LLC that protects you from that, and all those types of things. So, yeah, it's you know, difference of opinions and ways, but they both are successful, you know, when you look at it. So now back to like your Bitcoin prediction. So we were talking when Bitcoin was falling, I was averaging down the whole way. You were like, oh, Bitcoin's going to 20,000. Now I look back at it, I'm like, yeah, I could have probably just held off and bought in lower.
Yeah, that was my thoughts.
Yeah.
You know, hold off, because, you know, we hear experts saying that, hey, it's going to drop. You know, you listen to Peter Schiff. Peter says it's going to drop down to 8,000.
Yeah.
You know, because there's nothing there, nothing holding it and keeping it from doing that, right? So I'm looking at, hey, you know what, 20. It's going to hit 20, man. You know, you're putting yourself in, but wait to 20. You know, but you know, you was diligent. You know what I'm saying? You was diligent all around the way.
Yeah. And I'm still, you know, averaging down now. I'm still like, you know, able to throw more cash in and such. I knew it was going to 20, but 25 was pretty cheap. And I was like, okay, let me throw some more in there, because you know, in comparison, I sold most of my Bitcoin at 43,000.
Okay.
So I sold most of it, got out of the market. And then I was like, okay, I'm gonna wait, keep some cash on hand, and wait until it goes below 30.
Right.
So then now it's below 30. Then I was like, okay, now it's time to start averaging in. But now it's below 20. It's like, oh, I need to put more money in. And I wasn't like throwing huge amounts of life-changing capital, you know. But the lower it goes, the more I'm willing to risk. Okay. You know, and you know, put. You know,
do you see it going? What do you see it going to before it bottoms out? They say.
Well, a lot of the charts are saying about 12K, somewhere around there. Obviously, we don't know. Bitcoin hasn't, you know, experienced inflation and this type of or a recession. So this type of environment is different for it for sure. So we'll see. I mean, you know, Peter Schiff obviously has his bias, and you know, I respect it. And he has some really good information for me that I can learn from. But, you know, I know that his price targets are going to be essentially going to be zero. So, yeah, so he has his bias and whatnot. But, yeah. I mean, what's your price target?
10,000.
Yeah, you said 10,000.
Then I'll
what
go
was
in.
the basis for that price target?
My thing is, I remember me getting out some years ago. And I got in, I think, around 5,000. I got out around 14 or 15 when it hit that margin. So you're talking about around 2018. I just see that, like you said, nothing there to hold it. And 10,000 is good for me to start feeling comfortable putting in and seeing it rise back up when it does. Will it go any lower? I don't see it going any lower.
Mm-hmm.
But we don't know how long this is going to last, right? So,
Yeah.
but 10,000 is something I feel like putting in, especially when like we had a discussion. You had a certain amount you wanted to put in at a certain time. I like, man, get a little bit more if you wait it out a little bit more. But I understand dollar cost average and stuff like that.
Yeah.
One thing that I loved about the interview you had recently with Rick Rule, and he talked about not dollar cost average, and he talked about basically buying. I'm sure if he was in Bitcoin, he would buy a large amount of it right away at probably the price point that he wants. I look at it like that. I think that getting it at a good price, waiting it out, because it's not life-changing money that I'm going to put into it.
Yeah.
I want to get as much as I can. The cheaper I can get it. Will I ever see Bitcoin going to zero? I don't think it's going to go to zero.
Yeah.
To me, too much I'm riding on it. But I think that 10,000 is a good price point for myself.
Yeah, the only way it's going to go to zero is if the miners stop mining and people stop using it.
Right. I don't see that happening.
Yeah. So, especially you got a lot of emerging markets that have currencies that are failing. I was reading on Twitter where someone in Turkey had 160, I think their inflation rate was 160%.
Mm-hmm.
And he mentioned that, hey, crypto is like, even though it's going down, like this is I'd rather take a 30% decline than 160% decline on my capital.
Right.
And so you got a lot of people using that, but you also people go into like the stable coins like USDC and such, because that's hedged, that's pegged to the dollar. Whether what percentage you look at it, I mean that's all nuances or whatnot. But USDC has a pretty decent percentage pegged to the dollar. I think it's like 60% or something like that. But some places go there because they're like, hey, well, my currency's losing a lot of value, so I'm going to go to USDC, and the other coins as well, Bitcoin and such. So it definitely has a lot of use cases, especially people, that come to the United States to work, and they want to send money back to their family, and you got Western Union taking, 15%. It's like, okay, well, I'll send back Bitcoin back to my family, where Bitcoin is likely not gonna, take as much fees, or it's not gonna take as much fees, but the time it takes to send it, is it gonna drop 15% within that time? Right now, obviously, it can, in this environment. But before, Bitcoin was definitely more stable in its pricing, for a while. So yeah, so that's kind of just my take on just that nature of Bitcoin. And crypto. So it's a big use case for it. I mean, the blockchain technology is obviously good. So I don't see it going to zero.
Yeah. What did we hear about countries like El Salvador that adopted? I think they're the country that adopted it, correct?
Yeah.
I know that in the news they were looking at something like, what was the big thing about it?
Defaulting on the bonds or something?
Yeah, bonds, right?
Yeah, it's El Salvador is definitely in an interesting position because they did get in when it was, a lot higher. Mm-hmm. And, I don't know how much capital they have to deploy, to buy Bitcoin. But it seems like the guy came in pretty risky. The president, was taking a lot of risk, and I don't know who was in his ear during that time. Obviously we have some, you have what's called Bitcoin maxis, right? Who are, who are predicting like, Bitcoin's never going to go down, or Bitcoin's hitting 100K, all those different things. And so like, those people weren't looking at it objectively. Right. Because I had Garrett Soloway on my channel saying Bitcoin going to 20K since last year, and a lot of people are like, this dude crazy. I mean, we can even go look at the comments, like, this dude's crazy. Oh, dude's tripping, whatever. Right. And now it's below 20K. Yeah. So like, you had people like Max Kaiser saying that technical analysis, people that do TA is pretty much, astrology or like, like it's not a heavy predictor of where Bitcoin's going to go.
Right.
And so, and he said Bitcoin's going to 220,000 by the end of 2021, or something like that. So, a lot of these people that are like very biased, with Bitcoin, just like Peter Schiff's more biased against Bitcoin, people that are biased for pro Bitcoin, a lot of them were proven wrong.
Yeah.
And so, so I just try to look at it objectively. Like I knew like it was most likely going to go below 20,000 just from the charts. And El Salvador, they may have had some Bitcoin maxis in their ear.
Right.
Or something, because they got in at a higher price, and I don't know how much risk they have, from getting in at that high of a price. I think at first they got in like 30-something thousand, 38,000 or something like that. But I mean, yeah, now, you have this issue with other central banks feeling like they're risky, because they pretty much like almost like singled themselves out. It's like, okay, well, we're adopting Bitcoin as legal tender,
right?
Which is cool for Bitcoiners, and stuff. Like I think that's cool. I think that's very innovative, but it may have been too soon.
Yeah.
And now they have other countries that are like, okay, we don't know if we want to bail them out, if they need to get bailed out,
right? Like
because of the risk they took.
It's something. I mean, they looked at it. When Bitcoin was high, it looked like a good idea.
Yeah.
I started to gain a little trust, saying that a country was going to use it as one of the main currencies. So I started looking at it hopeful, and not until I started looking at it now. I'm like, man, that's a little risky. I hope that it fares well, but to make that jump, and have that faith, I've definitely seen Bitcoin is going higher, and I started to have a little more faith on things I didn't understand. But sometimes it's not good to invest or put money where you don't understand it completely. And I'm still learning this crypto market. So
yeah, that's what Rick Rule was talking about too, like investing in what you know. So, so like knowing that, what's kind of like your perspective on Bitcoin now? I mean, you want to get in at 10,000. Is it more of like a long-term? Like you feel like it's long-term?
Long-term.
So what's the bullish case long-term for it?
I'm looking at, as we start seeing more technology, more knowledge on cryptocurrency, I don't want to be the person, unfortunately, I want to use that term, missing out. So I'm looking to learn more about cryptocurrency, Bitcoin being the one that's been here the most since I think 2013, I believe.
2009.
So I'm looking at, making it long term and following the trends and just keeping a close eye on it. I'm not ready to risk it all, but I want to make sure that I add crypto in the long term and me rebuilding. So, but like I said, I'm more of a gold and silver, something to hold, something that's an insurance for my fiat, and definitely looking into some other investments. But I do see Bitcoin as being the one that I want to see out for the next couple of years.
Yeah, for sure. Yeah, and it's it's interesting because it's like, Lynn Alden talked about a lot of her followers on Twitter were critical of her, like, why are you still in stocks and gold? Like, why wouldn't you sell it to buy all Bitcoin? And she's very good at knowing her risk.
Right.
Like risk tolerance and reducing risk is very important. And you have a lot of people that are speculating that are, it's all or nothing, type mentalities and losing a lot. And so like, that's how you get wiped out.
Right.
And so, I mean, Bitcoin goes down, like, I keep telling myself like, hey, I'm going to be a millionaire in the next crypto bull market. Like, for sure. I'm not going to risk a lot of capital as far as like, a certain percentage of my net worth. I'm willing to put, 10, 15, 20%.
Okay.
In, something like that. But I feel like it's going to, I think it's going to go higher, especially once we get more into a risk-on environment, and especially once it decouples from risk assets. So right now, it's so tied together. You had so much speculation into Bitcoin. You had venture capitalists coming in. You had a lot of speculators. You had retail investors coming in. and a lot of these people are just trying to make a quick buck.
Right.
You know, you're starting to get more corporations, which we did see a lot more corporate adoption. You know, like MicroStrategy and El Salvador and all of that. And so now corporations are looking at it like, okay, well, this is something I'm interested in. I mean, obviously with the price being lower, there should be more interest there.
Right.
I think that with the price going lower, I think that a lot of corporations are going to come in and buy up a lot, especially being that cheap. When it was at 40, 50,000, no.
There was more skepticism.
Yeah, for sure. But with it being that cheap, and it kind of just depends on the level of fear that comes into the market. I mean, if we go through a recession and the fear level just increases dramatically, even more, corporations will still stay out until we see some type of bottom in the market. So I do think it's going higher long term. So that's kind of like my mentality why I'm gonna keep averaging down, because I just don't know where the bottom's at.
Yeah.
I mean, the charts tell you the likelihood, the probabilities of it going to 12K, 10K, and such, but that's not a certainty.
Yeah.
You know what I'm saying? So, I mean, I rather not stay on the sidelines and just average down versus betting on this is going here and then it doesn't hit there. And then by the time it, starts shooting up again, then I missed out on that low price point.
Right. Yeah. So, I mean, I heard that Dave Ramsey made a point. I seen an interview, a little clip, and he was saying that this is the market, when it goes down, it's the only place that people start running out. People start running away from the sales instead of, buying. He said, but you got to think about this. Why are you running away from major companies? Like a Coca-Cola, all the companies that prove its worth. You just know it's a time that it's a downturn, right? You want to put money into it, but you can rest assured that these companies are going to come back. That same confidence is not in a lot of the altcoins and stuff like that, Ethereum and Bitcoin, because like you said, they never ever went through a downturn like other big businesses when it comes down to stocks. So I can understand why people feel kind of weary, and big companies are feeling a little weary at this time. They trust the technology, they trust everything, but they may not be sure that these these altcoins and Bitcoin will come back. Remember the tech bubbles years ago. A lot of them companies never came back from the down market, right? So this is all new.
So the crypto market, it's been obviously a risk trade, but the risk was way lower, when Bitcoin was cheaper. Now it's more expensive, you're taking more risk. If you got in at 69,000, you're taking more risk, right?
Yeah.
So Bitcoin and the altcoins, they've been through a lot of downturns. We see the booms and busts with them, and those were separate from the actual stock market itself.
Right.
2017, the Fed did start raising interest rates in 2018, which stocks corrected too. Crypto went through a huge correction, bear market, but the stocks actually kept going up. Crypto was super cheap, just getting beat down.
Yeah.
So it was at that point, it was more decoupled from the actual stock market itself.
That's true.
And then once we had this quantitative easing though, after the stimulus and all of that, you begin to see them riding up together, huge amounts, huge percentages.
Which is kind of crazy for some people to think.
Yeah, so, Bitcoin, I feel like, obviously the altcoins were it was decoupled from the market for years. We saw booms and busts in Bitcoin when the stock market was continuing up. Ever since we had a lot of quantitative easing and the Federal Reserve, intervening, especially after the pandemic, we saw a lot of people run into risky assets, and we saw a lot of corporations come in, buying up stocks, buying up cryptos and everything. So it was a lot more adoption, a lot more involvement and engagement with the market. And so now it's almost coupled with the NASDAQ. So when the Nasdaq falls, you usually see Bitcoin and crypto market fall. So,
Right.
I think that Bitcoin has obviously weathered a lot of storms.
Yeah.
And people that have been in Bitcoin a long time have seen these storms come and go, and like it's still there, and it's higher than where it was like in 2009. You know what I'm saying? So, obviously it's 13 years old, so you got to take that into account too. Like it's young, it hasn't went through these inflationary times or whatnot.
Right.
But the technology and the innovation of it, I'm betting on it to weather this storm and come out as a new emerging asset.
Yeah.
And I think that obviously it's not going to replace gold. Gold's been thousands of years history, and I'm not selling my gold to jump into Bitcoin or anything like that. But I think that Bitcoin is going to definitely play a key role in the future, especially with how the current financial system is structured. You have to go through your bank to send money. You have to go through these major institutions and these major players to be able to send money overseas and stuff and pay huge amounts of fees. All these things that just makes it very very hard for people that are in countries that don't have as much like stability, financial stability and such. So I think that it's gonna come out of this, and this will be the first storm it weathered. And we may be the people that be like, hey, we got in Bitcoin 10,000, it goes to 200,000 or whatever.
Right.
And we may be the people that's saying like, hey, well, Bitcoin went through the recession. It went through 2020, went through the pandemic, went through, inflation, and for us to be able to share that with people, that'll give a lot more certainty.
It's still early.
In the future,
It's still early. So I agree with you 100% because it does give us the opportunity to see it weather the storm and to survive. It's just to talk about it for a later time. Just like we have relatives or we see the history books talk about the Great Depression. Exactly how times were that during that period, right? So this is interesting.
Yep.
I'm learning a lot through this process and learning about Bitcoin, a different currency, understanding decentralization, the importance of it, and how it benefits us. And from this time, if it wasn't for Bitcoin, I wouldn't learn so much about the central bank system.
Yeah.
So from this, it's a whole bunch of knowledge that's coming from it. It's a good time to learn, but it's a good time to also realize that we all have to take part in understanding this market and what's going on an international approach, not just where we're from. So that's one good thing about this. It's making me pay attention.
Yep. That's good.
To prepare for the future.
Yeah, and for those people that are like super bears, that's always a fear. Like even in my mind, what if the stock goes to zero? What if this crypto goes to zero? Bitcoin, for example. It's like, well, Bitcoin has a larger track record, than a lot of these altcoins. Some of these altcoins, I believe, are going to zero. That's why
most definitely.
I'm not touching them right now.
Yeah.
I'm like, they got a long way further to go for me to really buy them, and when I buy them, it's going to be more of a speculation, on the technology and whatnot. But, thinking about this, I know that their sentiment, so on both sides. So when someone is bullish, the bulls came out, they were like, Bitcoin's going 100K, 200,000, it's going here, going there, and it didn't reach there. Same thing with the bears. Bitcoin's going to zero, it's not going to survive, blah, blah, blah. I highly doubt we're going to get there. So it's kind of like extremes both ways, and how do you engage the middle ground, to look at it objectively and okay, how is this going to really, play out? So
it started to look like a money grab at some point because we all speculating, right? when we seen Bitcoin jump to the 60,000 mark, it's easy for us to jump on and say, yes, that 100,000 is right around the corner. It reminds me of Dogecoin. We saw that $1. We saw it hit $1 in our mind. But 75 cents, maybe the high, I held on just because I knew that $1. I thought that Elon was going to be the person to push it to that point, right? Mm-hmm. So that speculation, you just don't know. And people lost. I was looking at Dogecoin, looking at how people were excited. Now, the lesson I learned is that if you didn't know much about it, its utility, what it was going to be used for, you just paid attention to, who was adapting to it, who was going to accept it, who's going to use it for tickets, for their games, like a Mark Cuban, right? You're looking at Elon and pumping it up, saying it's going to be used by Tesla. That was enough for people just to be excited about it, So for those who are paying attention and just realizing, hey, it's a little bit more that we had to learn about the utility, about transactions, how long it's going to last, how it's going to help with the monetary system. These are things that we need to focus on, understand the white papers. These are things I learned from, following the hype and realizing that wasn't the right thing for me to do. So it almost gave me an opportunity to fail because I'm not putting everything all into it. But what I hear today is a lot of people putting everything into these altcoins, all their money. I think I heard Gammon, right, talk about it on Rich Dad Poor Dad podcast. He was saying that he was hearing that there's some millennials who are putting everything into altcoins, all their money. They're going 100% in. They may know something I don't know, but I don't trust it. I'm still skeptical. I'm still learning. So I'm kind of fearful in putting everything in. I'm excited to see how things will happen in the future, but I'm not 100% positive on this as of yet. I'm learning a lot, especially with a lot of conversations we have together, and it kind of gives me some things that I may be missing. But as a person who's getting their feet wet in crypto, take my time and consider learning about the process.
So yeah, that's very important. Like you have to have a bear case for something that, even if you're bullish in it, mm-hmm. and you're saying like, okay, I think Bitcoin is going higher later on. What's the bear case? So like, for example, nuclear, there's a bear case. Mm-hmm. We have another nuclear disaster or something that could take the equities down. But there's a lot of bullish case scenarios too, with the Japanese restarts, mm-hmm. The clean energy movement, all of that. So, nothing has, is just perfect in just how it functions. So like, for example, gold's had bear cases, a lot of bear cases, especially me reading this book, The Power of Gold, how gold went from being money mm-hmm. a long time until the Dark Ages. The Dark Ages, people weren't using gold as money as much anymore. People began to develop their own currencies, and then you begin to have these other forms of investments, arts, mm-hmm. And stuff. I mean, and you did have, the goldsmiths. They were using gold as art before, like the pieces of art, like from Leonardo da Vinci and all of them became of prominence, famous sculptures and stuff. So, gold did have a bear season during that where it wasn't as much money. I mean, obviously defined it was money, based off like the history and when King Darius started stamping his face on the coins and Croatius and all these other different factors that led it to being money. Mm-hmm. But the gold was there and people were just hoarding it in their houses, but they weren't like actually as much like trading it in a day-to-day currency. Right. Then eventually you had countries that started paying off, I think it was Byzantine. They had a lot of barbarians that were trying to attack them, these different tribes and different places that would try to attack them. So they had to start bribing them with gold. And then eventually the French got involved, which they were called the Franks at the time. And they began hoarding and stealing gold, or no, taking gold from their invasions and stuff when they would invade other countries and stuff. So like, then eventually gold became very popular and became money again. So like, it went through this bear season during the Dark Ages where after the Roman Empire collapsed, it was a period of time where gold was not, that money as used as a day-to-day currency. So, there's a bear case for everything, but you have to look at your long-term outlook, and then you also have to look at your, your bullish case too.
Right.
It's like, okay, well, do you believe this is going to be something that's going to be beneficial long-term? And are you willing to be wrong, at some point?
Yeah.
At some point, Bitcoin bulls are going to be right. Some point, Peter Schiff's going to be right. To some degree.
He's gloating right now.
Yeah. He is. But he missed out on a lot of gains. He could have gained a lot, but I mean, I don't think it's going to zero. I mean, so I'm just like, okay, how do I reduce my risk and assess my risk tolerance? So.
Okay.
So JT, where can we find you at?
All right, you can find me in JT Coin Rings on YouTube. That's Instagram as well, and also Facebook.
All right, cool. If you need any coin rings made, be sure to go check out
Hit me up.
JT's channel, his website. He makes some. He can even make these into some coin rings, right? Y'all probably can't see this far away, but this is the Wall Street Bets silver ounce with the diamond hands and the rocket going to the moon. I don't think it quite made it to the moon, but as people were predicting. But that's kind of the nature of markets. People become too bullish and make irrational decisions.
Most definitely.
And not look at the charts or anything like that, and then people become too bearish and miss out on opportunities as well.
Right.
So
much to learn.
Yep, for sure. It's good to stay objective. So, all right, man, good to see you, man. Everything. It's my guy.